Harry Dent, largest market crash coming soon. What's up, guys? Welcome back to Investing Insight, where we help you learn ways to achieve financial success and achieve personal growth. Miss some of our last videos? Feel free to explore the channel. If you're new to this channel, please like and subscribe to this video and click that little notification bell so you can be updated when a new video comes out. Today's video will be all about a really alarming warning. As you can tell by the title of this video, yes, it's coming. Harry S. Dent Jr. is a best-selling author and one of the most outspoken financial editors in America. He developed a unique method for studying economies around the world and uses his knowledge in providing insights on what will happen in the future. Dent describes the current situation of stock markets as the orgasmic phase of a bubble. It has just been building up, and people since 2007 peaked in their spending. Investors had a peak in the stock market in late 2007 and then experienced their first deep recession since the 80s. It was by that point in time that the Federal Reserve and Central Bank began to print more money than they had to in previous years. And they did exponentially more to keep the bubble going, and there will be a phase where we question the predictability of the markets. Dent actually predicted the peak in 2007 within several months. His work showed when the peak would happen and when the momentum was going to turn down. Today, he continues to analyze the state of stocks and the market by using chart patterns and trends to determine when this will most likely happen. He thinks that this year might be the time that the bubble will pop, when a country has an economy that has been stimulated for 12 years against fundamental demographics, slowing in technology, and all other cycles slowing down. Even a tiny thing can prick this financial bubble and cause it to burst. The Federal Reserve's plan is to start tapering. They will cut around $30 billion a month in buying bonds. When they finish tapering, then they would focus on raising interest rates by March. But the Fed keeps pumping up the markets, and the market will only go down when something big enough triggers it to crash, or when the last person in the world gets in the stock market. As you can see, it will be difficult to determine which one of those would happen. We've had that stock boost since the early 80s, and when these stock markets go up for a decade, they usually get hurt with the interest rates. A rise in inflation then starts, and bond rates go up. But the unusual thing in this scenario is that we have 6.8% inflation, and this will continue to rise, and the 10-year Treasury bond is yielding 1.4%. This will result in a negatively yield by 6% to 7%. One trigger that Dent suspects is the Treasury bond that keeps edging up. One thing to remember, there's a lag to everything. Monetary policy lags usually last about 18 months in real time, so they have been forced to taper off. One must also understand addictions and the bubble, since they're technically the same thing. So when something blows up, it would take exponentially more to keep it in a bubble or an addiction going, but it will only take is just pulling back but not stopping the stimulus entirely. Only pull back less stimulus and then no stimulus. This will force them to get a little more tight, and if they decide to pull back and ease quickly, it would seem that they are panicking. Now they're slowly going into tightening mode. It'll take a little while for them to respond and go the other way. Imagine if the S&P dropped 54% in 2 months. Some might say that it's impossible and that the only solution is for the Fed to print money again. But Dent suggests that printing money will not bring back the markets this time. Dent guarantees that in a stock crash after a major bubble, everything will go down. This includes utilities, but these sectors will go down 40 to 50%, and leading sectors will go down around 70 to 90%, so there's no place to hide. Dent mentions that he has the best inflation indicator in the world. Could you guess what that is? If you guess workforce growth, good job! When companies incorporate young people in the workforce, it would correlate with inflation over time. Dent suggests that inflation should be at 2% today. So the 6.8% inflation rate is magnified by 4.8%. This 4.8% was created entirely out of the recent stimulus from the Fed. As soon as the slowdown happens or the Fed stimulus stops, inflation will fall off. We could be at peak now or soon. But it will drop if the economy does not slow down. Inflation is most likely to rise a little bit, but it has already been up way more than it should be because of that stimulus. The stimulus is no longer increasing and the Fed is looking at tapering. Workforce growth would be nearing zero soon in the US, Europe, and East Asia. Recessions in stock markets are most likely to happen after a peak in stocks. Inflations would start rising from overcapacity and overstimulation. That would then trigger to slow down the economy and then would start to build again, which would then wash out the inflation, bringing higher unemployment, lower spending, which would bring inflation down. This is a totally artificial economy, which means that when it blows, it will blow big. Dent predicts that the markets might have peaked in November 22nd because he has been tracking the different market sectors and almost everything peaked except for Nasdaq and S&P. Small cap companies dropped around 13% and other countries have been down for some time. Some rising markets have been down for 12 months. The bond market peaked about 18 months ago. These are all signs that a crash is on the way. But how soon and how big? Dent believes the market peaked around November 22nd and we could also get another peak in the first 3 months of 2022. He believes if it goes past the first quarter of 2022, then we are in uncharted territory, which is very concerning. Dent believes that the federal government caused this bubble and it is unlike anything we have experienced in the past. But there will be a hard crash. We hope you enjoyed this video. Let us know in the comments below, what are your thoughts on Dent's predictions? Don't forget to like, share, subscribe for more videos. See you on the next one.